Morning, everybody. How's everybody doing this morning? All good? Going to do a little bit of a session on the S&P and the NAS this morning, just to answer a question or a couple of questions I've had over the last couple of days regarding them. Basically, just a little bit more information about how they work, why they work the way they do, that sort of stuff. Just to clarify why I buy them rather than sell them, which is what obviously everybody wants to do when we have days like yesterday, especially yesterday, because obviously I had a nice big down day yesterday and I did nothing but buy it, and a few people just asking why. So we'll go through them, why they work, and what drives them, really, so you can understand. Obviously, anything you trade, you've got to understand how it works. If you don't understand how it works, you shouldn't really be trading it. So you need a fundamental understanding of how the market works if you're going to be able to trade it properly, rather than just following arrows on an indicator, which works as well, obviously. But yeah. So how's everybody doing? Everybody have a good day yesterday? Pretty bleh yesterday. Not too bad. 1.13%. But nothing to write home about, mainly because the NAS dropped. So obviously I've been doing really well off the indices this week, this month. Closed a few out on FX yesterday, so we'll quickly whiz through what I did yesterday. Start with where are we? What's the date? It's the 14th, so 13th. So Euro New Zealand. I got out Euro New Zealand completely. Just really don't like it. The pair. It's just annoying me. It's probably going to come down. I think it is going to come down. Yeah, because we're stuck in this range. We've looked at this, haven't we? We're stuck in this range at the minute. Right at the top of it, which is why I sold it. And it came down. As you can see, I took my positions off here when we hit this support. So this is the kind of mid-area support of the range. Rock on. Sorry, I was reading the comments. I haven't known that for ages. So we've had a reversal alert. We've just retested it now, and it's coming back down again. I think it's probably coming back down to the bottom of the range, but I just don't like it. I hate trading ranges. I really hate trading ranges because I've been stung on ranges so much in the past. Whenever you take a range-bound trade, you obviously mean revert it, and it's always when I take the mean reversion range-bound trade is when it decides to break out. So I just don't like range-bound trades. But anyway, so I got out of that one yesterday. Didn't make a lot on it, but I made enough. It's not too bad. What else did I bank yesterday? 13th. Pound US is a sell stop. S&P. Banked one at S&P. Not a big one, just there. From last Thursday, one of the positions I had on from last Thursday, I took off. And US dollar CAD hit TP. So this was a little trade I took. Basically on H4, obviously we got massively extended on the 4 hour. I had the EA set just to take half an ADR on this, which it did. So I took it on M5. On the reversal alert here, got out. So yeah, nice, quick, in, out, done, 0.5%. So yeah, so that's what I banked yesterday. Nothing groundbreaking yesterday. Looking at today, current positions I got on. Let's cover those first. Euro Swiss, short. That's the other reason I got out the Euro New Zealand, because I've got this Euro Swiss short on still. Obviously, I banked quite a bit of this on Wednesday. And I've still got 4 positions on it short. So that's the other reason I got out the Euro New Zealand, because I've already got exposure on the Euro short anyway. So I thought I'd just leave that one on. So still got that one on. Came down nicely yesterday in London. New York did nothing. Asia's done nothing. London's looking a little bit bullish to start with. We've only just opened, obviously, but a little bit of a bullish action. But obviously, we've had a reversal alert on M15, so we'll see if this retest holds. If not, we'll probably come up to the Asian highs and then drop from there. So we'll see what happens with that one today. Pound US dollar, I was in profit on it. I didn't take it. I've got a couple of positions on. I took one manual, one with the EA. So I'm a little bit overexposed size-wise on this one from my initial entry. But we had a little bit of a push down in London, but only got down to the Asian low. We bounced off the Asian low, and at the moment we're having a little bit of a push. So US dollar-wise is slightly coming down again today. We had a bit of a sideways rotational day on the US dollar yesterday. Obviously after this move out of the range. We are down in this area that I identified as the potential zone for support resistance. We tapped into it beautifully and bounced yesterday. We've just come back and tapped into it today and held it at the moment. So we've got this big propulsion move here, which was the start of the break of these highs, which will act as potential buying pressure as well. So we're in a good buying area down here, really nicely extended. We've got news this afternoon. So that's all I'm in for FX wise. I've obviously got NAS and S&P positions on. So this afternoon we've got core retail sales and retail sales at 1:30. So that will be the catalyst to move us this afternoon. We have also got Lagarde speaking this afternoon. So watch your euro pairs at 1:15 just before retail sales come out. The market will probably, if Lagarde does say something, there will be some movement, obviously, on the euro. If she says anything that's interesting, obviously, she always says something because that's what she's doing, speaking. But if she says anything interesting from a surprise perspective towards the market, we might get some movement there. But the main market movement will happen after 1:30, just before New York Open, hour before New York Open, when we get the retail sales. And then we've got a couple of other news bits this afternoon. Just before and just after New York Open. So not a massive amount of news again this week. It's all been US dollar this week, as you can see. So right, so let's have a look at where we are. Andy, I'm short on Aussie US and pound US, looking and long on US dollar Swiss. You're short Aussie US, you're short pound US, and you're long US dollar Swiss. Yeah, that's good, but you are pretty overexposed on the US dollar. That was all I would say. You've got 3 US dollar trades on. If the US dollar decides to come down today on that news, you've got 3 times the exposure on the US dollar than you would if you only had 2 of those on. And obviously, if you only had 1 on, you'd only have 1 exposure. So just be a bit careful. If this US dollar cracks this level and decides actually we're going to use this as resistance and then we're going to come down to here, you're going to have all 3 of those positions going to draw down at the same time. Let's just be a little careful. Right, US dollar index, covered that one. So ADRs today, nothing. Weekly ranges we can ignore. We are on Friday, it's the end of the week, therefore the weekly ranges we can't really trade those. If we can trade them, obviously. These are all at their weekly range limits, so you can still use these, but obviously bear in mind these will reset on Monday. So and monthlies, the only thing we've got hit is the Euro Swiss, which hit I think on Wednesday or Tuesday, didn't it? The Euro Swiss hit its monthly range and we shorted it and we won, which is the job. So nothing hit there, nothing exciting on ADRs so far today, but you don't quite often get ADR hits on Asia, out of the back of Asia anyway, because obviously there's not a massive amount of movement in Asia most of the time unless there's some news in the Asian session. We haven't had news, so no news really overnight at all, so hence not a particularly amazing Asian session as usual. So looking at H4 extensions, there's a lot of these have dropped off because obviously the stuff that we were playing, like the Euro Swiss, which was massively extended over the 80 level. You can see it's good if you've been in here for the live room all week. You can see how I use this and how it plays out. So this looked like that on Monday. Yeah. And that's why we got into these positions. and obviously that's now completely disappeared because we've played out the move. So what we've got on at the moment left is Euro US dollar. Still very nice push. Obviously, this is based off of the US dollar weakness. The euro has got no legs whatsoever, so will be pushed around by the US dollar as it moves. So we're looking for short opportunities on euro US dollar. Always short on the euro. And obviously, the US dollar is exhausted, so we would expect some movement down. This is where I really, really want it to get to. If we can get up to here, this would be an absolutely beautiful short. So we've got multiple levels of support resistance here, and really nice zone. If we can get there, even if we just tap off that bottom bit, be lovely entry. So if we can get an ADR push on this, get up to 100 ADR today on the euro US dollar, that'd be a really nice entry. Bear in mind, we've got news this afternoon. So when you see news coming out, regardless of whether it's positive or negative, the market will tend to move off of it if it's red news. So they may well, and they could well, use the news to weaken the US dollar, i.e. pushing euro US dollar higher to get us up to that level, and then we'll get the move coming off the back of that. But that move may come in next week, early next week, don't know. But that would be a lovely play if we do get US dollar weakness this afternoon. So keep your eye on that one. But, it's exhausted. So there's every possibility this will just roll over from here this afternoon. Again, it's a 50-50. We've no idea what impact that news is going to have. And as I demonstrated earlier on in the week, when we had positive news on the US dollar, what happened to the US dollar? It tanked. Yeah, so forget this. Whether this is green or red or black, it means nothing. They use this to dump orders into the market because they know there's a lot of liquidity going in there because of the news traders. Okay, so forget what direction it should say it goes in. It goes in the direction the market wants it to go. So that one's still set up fairly nicely still. Pound US dollar is nicely still extended. I'm in this already, as you know. So again, waiting for reversals on this one. Had the reversal alert on it. It's a lovely M pattern, triple top. Well, it's double really, isn't it? Here. So we're retesting at the moment this zone. Looking for drop to the downside. So like it. Still like it. Still love it a lot. But again, all down to US dollar. I love this gap. When I see these gaps like this, these massive ones, where you get a big propulsion move out of an accumulation, and they run with it, it's not guaranteed, but it's such a high probability that we will come back to retest that area because there's so much buying in here and so much movement. Typically, we get the sellers coming in because everybody profit takes on this move, and then the buyers step back in and push back out of that area. But occasionally they do get orphaned and left behind. And the higher the time frame they appear on, the better they seem to be. So we've got two really good ones there. But we could see like a 3 to 4 day push out of this, and then they'll come back and do it next week. So we'll see. But really like that one still nicely extended on the 4 hour. Yeah, we haven't got down below the 70 level. So if we embed up here and we squeeze up here for a few days, so be it. Come down at some point soon. US dollar Swiss, unless there's anything fundamentally going wrong with the US dollar, obviously, then yeah, we reevaluate. US dollar Swiss is a really good looking one as well. So I can see why Andy's in all these US dollar positions. There is a lot of them set up really nicely because obviously of the way the market's been moving this week. But you can see the obvious support resistance. We had a lovely 3-bar reversal rejection out of that, and then we've pushed back down again. But the bulls are stepping in again. We're in this buy zone, so this is a beautiful spot to be buying US dollar Swiss. It's very rangy, very choppy. So there's a lot of movement on it. So it's really easy to get in and out of. But this is one that I've been caught in squeezes before. It does tend to squeeze sometimes because the Swiss franc obviously gets a lot of money powered into it. If you get that happening at the same time as you get a US dollar move in the opposite direction, this thing could go on to these big, strong moves where they hold for days and days and you can't get out of them. They do obviously untangle at some point, but this is one of the pairs that, of all the pairs I get into, and I've been in drawdown in the past, it tends to be the New Zealand and the New Zealand Swiss and the US Swiss, which are the ones that I've always got tangled in before. So it's not my favourite pair. Just from a historical point of view, we fall out. US dollar yen, again, beautiful setup. Pull back to the 72. We know how much the market loves the 72. And also coupled with a massive, strong move with zero profit take. Embedded below 80. It's absolutely gorgeous, long. I'm not trading the yen at the moment. In fact, this is so tempting. I've got no US dollar on. I also have. I've got US dollar long on, haven't I? Pound US dollar. Yeah, I mean, this is a really, really nice one. The other thing I like about this is where we're trading at the moment. This area of balance here, where we transacted for a long time there. We were very happy. We tried to get out of it, weren't interested, came back in. Tried to get out of it, weren't interested, came back in. This area is like a magnet for price. It loves it, this zone. And it's exactly where we are now. So the fact that we've had such a big, strong move back down into here tells me that we're more than likely going to get a pullback out of it to see if we can use this as a support zone. 72 is confluence. We've got this big gap up here to aim for. It just looks really, really nice for a long at the moment. Really, really extended on the RSI. So worst case scenario, we may well get into some chop, but I think the next move up is due on this one. So really good looking opportunity, US dollar yen. But the yen as well is difficult. This is a horrible pair to trade. I hate trading the US dollar yen because these two move in tandem a lot of the time. You tend to get a lot of chop on them. But yeah, very nicely extended. So let's have a look on the lower time frames where we are. We're embedded on the hourly as well. Look. 2 solid down days. 1, 2, 3, 4 rest, 5, 6, 7 down days. It's got to pull back, hasn't it? Shot. I like it a lot. Let's go for it. Why not? I'm going to regret this. I know I am. I always regret trading US dollar yen. I always regret trading yen pairs. Full stop, really. But going long. I can't remember what number I'm up to. Let's go 13, 14. I'll go for an ADR on it because it is very extended, this one. So, ooh, where's my target gone? What happened there? Go for 1 ADR. I've had a reverse alert and we're retesting. What about M15? Had a reverse alert. So I'm going to take the reversal retest on this one. Retest alert. Let me say it live. So the reason I've chosen retest alert there is because we have already had the reversal alert. So what I'm expecting is a retest. So we're retesting at the moment. So I will basically take it when we break back above the reversal alert. So, okay. So US dollar yen, I'm going to start getting into long positions on. So that's it for the 4 hours. Okay, I wonder if good news for the US dollar is actually bad news for the US dollar. Seems good news, US creates risk on appetite and so the flow of the currency and into stocks, for example. Bad US news, risk off. There is nothing to do, news has nothing to do with that as such. The news that we see. So there's different types of news. Just cover that quickly while you're talking about it. There's different types of news. There are what we call leading indicators with news. Things like building permits, M2 money supply figures, stuff like that, which has a fundamental impact on the bank's decisions to inflate or deflate a currency. Then you have what's called reactive news, which are things like retail sales, which will be a figure as a reaction to the monetary policy that has been placed. So when analysts in hedge funds and large firms, investment firms, are looking at fundamentals, they do what's called scorecarding. So they will basically look at what the potential impact historically and what the potential impact will be moving forward of a news item that comes out. But there's only a certain number of these news items which actually affect the fundamental analysis of whether a currency will go long or short. And that is what we see in the COT report. Yeah. So this positioning is based on analysts in firms and their overview of a fundamental news release, i.e. Building permits go up, which is good for the economy because it means that as more building permits have been issued, there will be more jobs created, there will be more investment, etc., and it tends to help the economy. If the building permits drop, it means that we're going to be building less, which means there'll be less jobs. So the job figures that come out have got nothing really to do with forward movement. It's a result of what has happened. So there's leading news and there's reactionary news. It's very complicated. It's economics, and this is why we don't need to know about it in detail, because these figures show us what these brainy analysts have already done and analysed and said, right, I think in the next 3 months the US dollar is going to go up because of all this stuff. We look at this figure and go long. We don't need to worry about it. Most of this news is used by the markets to dump orders, yeah? I've got $500 million worth of US dollar transactions to do today at Citibank. I can't dump $500 million into the market at once, because what will happen is I'll get a candle that looks like that. So what I have to do is split it into lots and lots and lots of small orders. So I start dumping my longs into here, and then I stop, and then the market pushes back against it, and then I dump more in, and then all of a sudden a news release comes out and I dump in half of my lot. And then I let the market pull back, and then I dump a bit more in. Yeah, this is what we see in news. That's what news is used for most of the time by the banks, to dump large orders into the market. So it doesn't matter whether this comes out positive. We saw example here, prime example, US dollar, good positive news. What happened to it? It dumped massively. Doesn't matter. It's what the market needs to do at that news time. That's what it'll do. If you get fundamental figures that come out for employment that say it's the best figure in the world and they've got $500 million they need to dump short, they'll dump short. Doesn't matter. Probably reverse at some point, but that's how it works with news. So try not to look at it in that respect, as you use it as a, when's the next movement going to start on the US dollar? The next movement on the US dollar is going to start at around about 1:30 this afternoon. I haven't got a clue which direction it will go in, but that's when they're going to start to make it move, yeah? So the big players use it, and especially non-farm payroll, yeah? The amount of money that gets dumped in non-farm payroll. But what's it do 90% of the time, non-farm payroll? It goes like that, and everyone goes long. And then they retrace it back the other way. And then everyone goes short. And then they bring it back to the middle. You get a whipsaw. They just made an absolute fortune out of that. All retail traders lost their wallets. Yeah, but what they did was they dumped the orders they needed to dump at that particular time into the market to make money. Sort of big manipulation. But they have to do it because obviously they need liquidity to place their orders. We are their liquidity. Our stops and our pending orders are the liquidity that powers the market. Hope that makes sense. That's my take on it anyway. Morning all. The gap indicator isn't available anymore. Anyone have a good one? It's in the Telegram group. Laurie, so go in the Telegram group and look in the files section. It's called Hidden Gap. News is used by the big players just to wang the market. Good word. Wang the market around to soak up liquidity. Yeah, exactly. The market works. The way the market works is the big banks accumulate positions by going up and down, up and down, up and down. We try to trade it we get stopped out. We try to go long, we get stopped out. This is why everybody in the retail market goes, why is it every time I hit the buy button, the market goes down? Because you hit the buy button, put a sell there, so they come down and take your sell before they take it that way. That's why that happens. It's an accumulation phase, range, consolidation, whatever you want to call it. And then basically, as soon as they've got an accumulation of enough money that they are happy to take it in the direction they want to, i.e. they've accumulated, for example, in this accumulation phase, they've built up enough orders so that if they go long, they will make 1 million. If they go short, they will make 0.5 million. What they do is they go long. They make their 1 million and then the market pulls back. That's the way the market works. And this is why we have these people called market makers. Their job is to build a book, make a market, and move the price so that the banks can profit off of those moves. And obviously transact all their transactions. So for their customers, obviously corporate customers need legitimate, massive transactions done. That's all done by the banks as well. But this is what I mean, what I said yesterday. The sooner you understand how it all works and the fact that you know you've got no control over which way the market's going to go, that's when you suddenly realise it doesn't make any sense to start putting all of these stops and these pending orders in the market, because all you're doing is you're feeding the market. If you enter in with tiny, small positions in the general bias of where you think the market will go after a move, suddenly it all becomes really easy to make money. Same questions every day, Diamond's just said, yeah. But it's important that everybody hears it every day. If I have to answer that question every day, if I knew that 10 years ago, I would have been profitable for 10 years. But I didn't. And it's something that is hidden away a little bit, I think. It's not covered in most education out there because the brokers are interested in making their money out of us, pressing the buttons, and to do that, they want us to get stopped out as much as possible, because the more we get stopped out, the more we press the button, the more commission and spread they earn. So they don't tell us. It's not in the banks' in institutions' interest to tell us what they're doing, because obviously then we'd game them and they wouldn't be able to do what they're doing. Anyway, rant over. Right, so there's your RSIs for today for 4 hour hourlies. US dollar Swiss and US dollar yen. So we've covered those obviously here, but they are obviously extended on the hourlies as well. US dollar yen's just coming up. I'm just going to take a buy manually, and I'm just going to adjust the EA. Oops. Because I want to make sure I get in on this long. So that's fine. So just taking a manual on that. It looks really good for 4 hour and the hourly, and I just love the 72 bounce. If this ends as a bullish engulfing, I think we'll probably be off on a movement today. Right, so that's really all. Oh, you meant the gap indicator. Sorry, Damon. Yeah, the gap indicator. Yeah, I do get asked about that one every day. Telegram group. Make sure you're in the Telegram group if you're in here, because everything you need to know is usually answered in the Telegram group as well. So, but obviously how the markets work is something I get asked all the time as well. Market analysis is great to hear over and over again. Yeah. Right, so that's it from an analysis perspective for today. There isn't really much else, obviously, as you can see on the hourlies. There's nothing extended on the hourlies. The 4 hourlies we've covered, and these ones are the ones we've been kind of looking at all week anyway. And the other ones we've been looking at all week have all played out and gone in the bank. So S&P and NAS, I've still got positions, obviously, on these. So I just want to spend a little bit of time covering these two, because I've been asked a few times why I don't sell these. And to do that, I really need to explain how they work. So if you already know what these indices are and how they work, you probably don't need to listen to this. But If you want to get someone else's take on it, feel free. These basically are indices, obviously. So the NAS100, NASDAQ, QQQ, whatever you want to call it, depending on how you're trading it and what your broker decides to call it, is the top 100 technology stocks. The S&P 500 is the Standard & Poor's 500 top stocks overall. Yeah. So this is an index of the top 500 US stocks. So the biggest companies trading on the markets. This is the top 100 tech stocks trading on the markets. And these two are very heavily correlated, as you can see. And the same with the Dow. The Dow is the top 30. Okay. And as you can see, very heavily correlated. So the reason they are correlated is because tech is the fastest moving sector. Obviously, we live in the computer age, so anything to do with tech is a big company. They tend to be big, fast moving businesses, and therefore these 100 all appear in the S&P 500. So when the tech stocks move, the S&P gets moved because 20% of the stocks in here are actually this indices. Okay. But the other reason they move in tandem is because the tech market has an impact on all markets. Tech market has an impact on aerospace, for example, because of the all the aerospace technology is usually a tech company. So the other sectors are all impacted by the tech sector as well, which is why a lot of people trade the NAS, because it is the fastest moving sector out there, an indice, and obviously it tends to go up. These indices are also engineered by their very nature to go up. Yeah. So when you're looking for an edge in the markets, in any market, the biggest problem everybody has is directional bias. And that's the one thing that is eliminated with these indices. They go up. So why would you ever sell them? Yes, they do pull back, right? But look how many times they pull back and how big those pullbacks are compared to the pushes and how strong the pushes are. Yeah. So with these, the way that I trade them personally is I buy the dips as we're pulling back. So whenever we pull back, I'm interested in getting in because historically it will then push back in the opposite direction. So what affects these and what makes these move is the share prices of these individual stocks. Yeah. So let's look at the NAS to start off with. So this is the NASDAQ. Let me just move this down a little bit. Nice advert for Eternals coming in. So this is the NASDAQ. Okay. The NASDAQ 100 companies. Yeah. So you can see here, this is all 100 companies that make up the NASDAQ, right? Now, if one of these companies was to go pop for any reason, so let's say, for example, Dollar Tree went pop, which is what somebody said about the other day. Don't ask me why there's 101 in there. It's roughly 100. Somebody was saying like this company is going to go bang, it's going to go pop, it's going to go bankrupt, so therefore the NASDAQ's going to collapse. No, it's not. If this company, which one did I pick? Dollar Tree. Sorry, Dollar Tree. If Dollar Tree goes pop, yeah, 102, whoever that is, pops into the indice. Yeah. So yes, the indice will have a pullback when Dollar Tree goes pop, but it will be replaced by something else, which will have a stock value, which will push that back up, right? So the fact that somebody in here might go pop doesn't really affect the NASDAQ in a negative way. But saying that, obviously, if somebody like Apple, obviously it's the top of the tree, has a bad earnings quarter and their stock price collapses, that will have a negative impact on the market. So the pops and pullbacks you see on the market are being created by events like news releases from Apple, Broadcom, Intel, whoever, and earnings figures released by these companies. Okay, so what happens every quarter You remember my moving averages that I use? And there's going to be a little light bulb moment going for some people here. This is the 72 moving average, which represents a quarter. Yeah? 3 months worth of trading. Yeah? These companies release quarterly figures, 3 months figures, earnings, right? So that's why I use the 72 and the 24, because it's monthly and quarterly moving averages. They release quarterly earnings, which will either bolster their share price or drop it, right? But when a share price drops, what do people do? Buy, because it's cheap. So what you tend to find is, even if a company like Apple comes out with bad quarterly reporting and it drops its share price, the NASDAQ comes down, everyone goes, oh, Apple's cheap, I'm going to buy it. And it goes back up again. The only time you get a real problem with any of these companies is if they do something really stupid, like Google decide, we don't want to make money out of advertising anymore because we love you all and we're going to make AdWords free for everybody. Boom. That will have a hideous problem. But what will happen is the board will get kicked out and replaced by someone else who will come in and go, actually, we changed our mind. Right? Stocks don't go down with companies like this because they are big corporations. They have boards, they have shareholders. If the shareholders aren't happy because the share price is going down, the board gets replaced with somebody else that comes and bolsters the company. So these are all manufactured to go north. Just purely by the way that business and economics works, right? So you long them. So there's the top 100 on the NAS. This is the S&P 500. Yeah, look at the similarities here. Top 500 components of the S&P: Apple, Microsoft, Amazon, Tesla, Alphabet. NASDAQ: Apple, Microsoft, Amazon, Tesla. Where's the other one gone? But you get the point, right? S&P is made up of big players in the tech sector, which is why the NASDAQ tends to lead the S&P in your charts. When the NASDAQ drops hard, the S&P will slowly drop, which is this is a lot slower than this, which is why a lot of people trade the S&P, because it's much more beginner friendly. The drops and the spikes are slower and less reactionary, and you will make and lose less money because of that. But it's easier to trade. Much more respective of moving averages. Yeah. Whereas the NAS in the same period here had a little bit of a wobble. Yeah. So it's slightly different, slightly less aggressive. Okay. And somebody was in the Telegram group earlier on in the week saying, oh, it's all going to collapse, it's all going to crash, it's all going to go wrong. And I kind of disagreed because of the fact that we are now entering earnings quarter. So remember I said everybody releases their quarterly earnings. These come out at different times of the year. So this is the earnings calendar at the moment for today, right? For the 14th. Yeah. So these are the companies which are releasing earnings today. If you click on large cap here, you'll see that today, Citigroup, BlackRock, Wells Fargo and JP Morgan, some of the biggest companies in the world, are releasing their quarter 4 earnings for 2021 today. Okay. Earnings typically come out as expected or above expectation. What does that do for stock prices, do you think? Pushes them higher. If stock prices get pushed higher, what do you think is going to happen to an indice? Pushes higher. Okay. So this is what's coming out today. Tomorrow we got a few. Next week we've got 506 earnings releases. Okay, so this is another good calendar to look at. It's called Interactive Investor. You can go and Google this. It's ii.co.uk. Really easy one. ii.co.uk. Interactive Investor. This is a good one because it gives you a calendar overview. Yeah. So today, these are the big players, right? And it tells you when they're coming out as well. Pre-market, open or aftermarket. And this is pre-market as in before 2:30 UK time. Citigroup, JP Morgan and Wells Fargo are releasing their figures. So when the market opens, when that bell goes ding, 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 there's going to be a flurry to either buy or sell. these stocks based on their quarterly earnings. And if their quarterly earnings are good, everyone will want to buy them. And this is where you tend to see pre-market activity happening and you get gaps. And these are the days when the NAS just basically flies, or the S&P just flies, goes. Yeah, we have days where we open and out of nowhere, here we go, let's look at last here. New York Open, boom. Boom. Yeah, that's why. And the same in the opposite direction. Yeah, but the fact that we've had a pullback just before major earnings news, to me, is why we're going up. But if that earnings all comes out as negative, yes, we are going to get that. But only for a short period of time. Because why? When a stock goes down, it becomes cheap, overbought and oversold. Remember these oscillators, why I don't use the terminology overbought and oversold. I use the terminology extended when I'm talking about Forex. Because there is no tangible thing with Forex. It's measuring an exchange rate. With a stock, there is an intrinsic value in a stock. A stock price is linked to the profitability of that company, right? So if the share price of a company is very, very, very low, that is a good buy, because it's probably going to get to a point where it's going to be lower than the actual value it should be, and therefore everybody starts to buy it. So typically oscillators were used as an overbought or oversold indicator. So when those stocks come tumbling down because of bad quarterly earnings, everyone will go, oh, that's cheap, and there'll be a buying frenzy to buy them back up. Yeah, and this is where that saying buy low and sell high comes from. And a lot of the time what investors will do is they will wait until quarterly earnings come out and they will buy, and then they will sell before the next quarterly earning figures are released. Because most of the time forecasts will be positive. So there'll be monthly reporting. Yeah. Every month there'll be sales figures reported. Again, going back to my moving averages. Monthly, quarterly. This is why these are used, because we've got monthly figures, monthly movements, and quarterly movements. And they're all directly related because these are stocks to earnings reports. And we are entering what's called earnings season in January. So obviously reporting is done quarterly, every 3 months. Therefore, every 3 months, these companies are releasing their figures. A lot of companies also work on a calendar year. So they will use the quarter from January, February, March, April, May, June, July, August, September, October, November, December. So end of quarter in December is reported in January. Usually takes a couple of weeks for figures to come out. So what you're going to see here, as you can see, over the next couple of weeks is massive earnings reports. Google is having its quarterly earnings report on the 1st of February. Yeah. So this doesn't go down, obviously, Google. It's just one of those never ever going to stop going up making money type things. Same as Amazon, really. So this is going to come out positive. What do you think is going to happen to the NASDAQ on the 1st of February? Not rocket science, is it? It's probably going to go up. So this is basically why the long version of the short reason as to why I long the indices and I don't short them. Because first of all, I'm lazy and I can't be bothered to keep looking at calendars about who's reporting what. And I can't be bothered to look at those companies, look at their performance historically, analyze what I think their quarterly earnings figures are going to come out at, and then actually react to them. But I know how the market works, and the fact that if something is having negative reports and their stock price is going to come down and they are big enough to drive the market down, I know that everyone's going to start buying that stock up because it's cheap, which will drive the price up. Therefore, the indice will also go alongside with it. The danger of doing this from an investment perspective, and this is why I use the S&P 500 as my investment vehicle for my pension, if you like, is because you've got 500 stocks in the S&P. Therefore, you've got more diversification of sector in there as well. If we look at the S&P and what the S&P is made up of, you haven't just got tech stocks. You've got lots of finance in there. You've got pharmaceuticals in there. It's made up of all sectors. It's the biggest companies in all sectors, oil, gas, etc. So there's lots and lots and lots of diversification in there. So if you have a sector that gets hit, for example, tech sector got hit badly in COVID because mining stopped. Therefore, minerals to make semiconductors became rare. Semiconductor prices went up. Therefore, equipment costs went up. Manufacturing slowed down. Demand was above supply, and therefore the sector struggled. At the same time, other sectors like Netflix were flying because everyone was sitting at home and everyone was signing up to Netflix. So that went up, right? So you get one part of the tech sector affected negative, you get one part affected positively. But the S&P is made up of lots of different sectors, so it's a safer investment, and this is why people invest in the S&P. And a lot of hedge funds and investment companies are measured against the S&P. So if the S&P can, on average, return 8% a year, if you, as a hedge fund, can return better than the top 500 companies in the US, you're good. Yeah. So does everybody understand that? Anybody got any questions on that? Does it make sense? But I just wanted to explain why I don't short it. Because you can make money shorting it. Don't get me wrong. Yesterday, a lot of people made a lot of money. If you'd have shorted it out of the London highs on Tuesday, you'd have done really, really well. If you shorted it on Monday, you'd done really, really well. And, it can come down below this level. This thing could come down here today, and next week it could have a really bad earnings season, and there could be a real bad drop. But it's not going to be something that is not going to get undone at some point, which is why I choose not to sell it. And yes, I could have sold it there. If you're going to sell it with a stop loss, no problem whatsoever. But obviously, the way that I position trade. I'm entering positions into the market, waiting for anticipated move. So I can't short this without a stop on it. And if you're using a stop, it's not a problem shorting it. Yeah, it's really easy. Look, market structure is lovely. It works the same both ways, doesn't it? Market structure goes down. And you tend to get these big collapses as well. There's really, really good shorts. It's the old climbing up the stairs and falling down the elevator shaft. It happens a lot in indices. But I choose not to do it because I find it easier just to buy the dips. Every time we get down here, I buy it. Every time I'm down here, I'm buying it. Look, I'm going in pretty hard down here because I reckon that's going to happen today. Yeah, and every time you get one of these gaps formed, right, it becomes a target for price. Everybody that's sold here, right, has got to get out of those positions. What do they need to do to get out of their positions? The opposite. They need to buy it. Yeah, if you sell a stock to exit, you buy. If you buy a stock, sell, you exit. Yeah. So it goes the same way. And when you hit the sell button, you've got to hit the buy button to get out, as we know. For you, when you do this on your position, when you right click and close that position, as far as you're concerned, you're just closing that position. What's actually happening behind the scenes is the opposite transaction is happening. There's a sell happening if you've bought. So there's somebody out there that wants to sell it right now. When I close this position out, I'm basically transacting with that person. Somewhere in the darkness, there's an algorithm taking the other side of my trade. That's what's happening. Okay, so that makes sense. Anyone still awake? Don't want to bore you, but I just wanted to explain it in detail. And maybe I'll chop this bit out and stick it up so that I can refer to it in future. But that is the premise behind my indices strategy and why I do what I do. Makes logical sense to me. If it doesn't make logical sense to you and you totally disagree with it, hey, that's fine. Carry on selling. Everybody can make money in different ways in the market. And you have to find your niche. When you find your niche, you stick with it. Right, so that covered. There's nothing much else that I'm interested in getting into today. Let me shut the S&P down. I've got, talking about S&P and NAS, I've got a TP set just below here. Let me put it out to the hourly chart. I'll show you why I've decided to pick that spot. So hourly, we've got this candle here. Let me zoom in. This this area here, this up candle here with this double low here. I think we're going to push up into there. This is where we may well find some selling pressure coming in. If this move here is going to continue today, i.e. we are going to get some figures that are going to drop, we're probably going to get a little bit stuck there and drop it from there. So I've got a TP set there just to bank around about 1% off of that position. And then obviously we will see. But I suspect we're going to get a little push. And I'm doing the same thing on the S&P. So I've got a few extra positions in there. I've got one there, again, just below this area here. It's just below my break even on the S&P. So that's all I've got planned really for this afternoon, for this morning. Also looking for longs now on US dollar yen. Yeah, go for it. It's a good long. I've just got in twice on the EA. Good one. Just doubled my position up on that. Let me just take my manual off. I'll let the EA do it. Let the EA run it. Yeah, I like US dollar. I don't like the yen at the moment. This is trouble. I'm really undecided on the yen as to directional bias with it. And the reason I don't like this pair, which I've said before, is because they quite often move in tandem. So if we are expecting this big US dollar push today, or at some point soon, because we're so extended and exhausted on the Dixie, quite often we'll find the US dollar powering up. And obviously you can't go long on something you've got a long bias on. You've got to have a bias long on one and short on the other to be able to trade it, obviously. So I often find the yen is stronger than the US dollar, which means that when you get the US dollar powering up, what happens to the US dollar yen is it actually drops. Which is why I don't like it, because it's a little bit of an erratic pair to trade. It's like the Aussie New Zealand. It's the same thing as the Aussie New Zealand, which is why this is so organised and choppy and has such a low ADR, because it's the Aussie and the New Zealand. They're both next door neighbours, pretty much the same economy. So it takes something fundamental in either the Aussie or the New Zealand for one of these to actually have a big shift against each other. And the Euro Swiss, yeah, same thing. Look at the Euro Swiss. Yeah, Swiss franc stronger than the euro, but they're next door to each other in the Eurozone area. It's all these pairs don't work well a lot of the time. From a short perspective, obviously, when you've got one that's massively weak, I mean, the reason this is working at the moment is because we know this is massively weak, the euro, and all we take is a little bit of Swiss strength, and boom, as we saw, you've seen what I've been doing on this. So yeah, but that's US dollar. I love it from an RSI perspective. Yeah, this thing's shot, but I'm not convinced we're going to get a massive pullback on it. So I'm just going to keep a close eye. I'm going for one ADR. Which is 65, which is up into this area here. So I'm going for one ADR up there. But I'm going to monitor it when we get up into the support rectangle on the 4 hour. I'm just going to keep an eye on this this high. Yeah, it's great. It's not just intangible economics. It's tied to how we make money. So very concrete and relevant. Yeah, cool. See what I mean regarding the yen? Yeah, the yen is I just don't like the yen. The other thing you fall out of love with stuff, right? I fell out of love with gold a few years ago because every time I traded gold, I lost money, and I've just thought, not doing it anymore. I've had enough. and I don't trade gold anymore because I got stung by it a lot. I've been stung so much by the yen on squeezes in the past. You kind of fall out of love with it, and it's the same. And we had it before Christmas. We had some yen movement, which was absolutely huge, and these squeezes here, and you struggle to get out of them. Just as you think they're going to stop, they power up. Yeah, and this is what the yen does, but this is obviously on light liquidity. But it's the same thing. Everybody that bought here has got to sell, and we're seeing the sell. Always happens. Yeah, you buy, you got to sell. You buy, you got to sell. You buy, you got to sell. All we're doing is we're waiting for the sells. That's what we play, the sells. Well, I play the sells. Do what you like, but that's what I do. Okay, so that's all I've got today. Keep an eye on, obviously, everything today. As I say, I've got the Euro Swissy on short. I've got the pound US dollar on short. And I've got the US dollar yen on now long. So all I've got for Forex, and obviously long on the NAS and the S&P. So I will be taking profits through the day if anything gets to a decent level. But yeah, I mean, this US dollar yen, look, it's just... When was the last time we were down there? There, and there. So yeah, I mean, we're going to go. Nice extension there as well. So it's due, well overdue. But how far it's going to get, don't know. Because obviously we had that big drop on the Dixie, which bigger than usual. But look at where we are. It's just absolutely perfect for a bounce. So all looking good. All nicely set up everywhere. Okay, so I'll call it a day there. Give us a thumbs up if you like the stream. I will be back at 2 o'clock this afternoon. I've got a plumber coming round again. If you were here yesterday, my plumber turned up. I've got a plumber coming around again at 1:30. Another plumber, because I'm just getting some quotes on some radiator stuff. But hopefully he turns up on time, and hopefully he'll be finished by 2. We're only talking and getting quotes, so it won't be long. So I'll be back on at 2 o'clock. Keep in mind today, news 1:30 before the market opens. We've got ECB, we've got Lagarde speaking. We've got retail at 1:30. So this will be where we will get the US dollar moves kicking in. And quite often the whole market will go into a little bit of a holding pattern during London, waiting for news. And then obviously the whole lot explodes afterwards. So everything could move this afternoon off the back of retail. And obviously we've got all the earnings releases. So as soon as the market opens at 2:30, there'll be a load of stock movement happening as well. So it should be a busy afternoon. So get ready for hopefully some decent profit takes this afternoon. Okay, so back on at 2 o'clock. If you need anything, come into the Telegram group. I'm always in there to answer questions about indicators, strategy, anything you like. If you've got any questions, fire away, and I will answer them in the live room if you're in here. So have a good morning, hopefully, and I will see you at 2 o'clock this afternoon.